Welcome back here with Markets Today Talkback. This is the show where we're taking all of your questions on the market, the macros, the sectors, the stocks that you want to talk about. Tweet away and we'll take your queries live. Well, one hallmark of today's trading action was the sheer outperformance that we saw in bank stocks. That Bank Nifty itself was outperforming the Nifty by quite a margin. Lata, what's happening here? What's the interpretation about, this ordinance and how life changes?
Well, actually, the Bank Nifty largely is dominated by private sector banks. So today, the Bank Nifty was high also because of the likes of IndusInd and such stocks. Though, to be fair, you did see a fair bit of green even on SBI, Bank of Baroda and ICICI Bank, all of whom are people with NPAs and benefit from the announcements over the weekend, especially on Friday. The ordinance is expected to bring RBI proactively into the picture. RBI itself made some rules telling banks that you can't be naysayers in the joint forums to resolve NPLs. You come with a firm, yes, and don't say I can check back with my board. So the rules have been tightened. The markets have taken it very, very positively. I was myself not so positive, but Ashwani in the morning said that the PSU banks are looking like they are, waiting to go only higher at the first dip. So they've clearly obeyed the chartist, and we will have to wait and see whether that is backed up by some fundamental move. I thought that they will bow down to results as well. Only Canara Bank bowed down to its own result, which were quite subpar. That's the story of what happened on the banking stocks today.
Okay, on that note, let's go back to answering some of the questions we're getting from our viewers. Nirmal Punwani from Mumbai has written in with his query. He's been holding 500 shares of Union Bank and he bought these at a price of roughly 161 rupees, I believe. And the purchase was made about a year and a half ago. He's a long-term investor, wants to know if he should hold on or whether he should sell out of this stock. Dipan, let me ask you first, what you thought of the bank rally today, the market's interpretation and the optimism with this ordinance and Union Bank in particular?
See, I think banking remains the leadership sector in this bull market, and I think the news flow certainly is beneficial to the sector. Whatever steps the government or the RBI takes, I think the worst is over for PSU banks and corporate lenders. And from this point on, I think we are seeing an end to the NPA problem, and who knows, maybe 7, 8 quarters down the line, the provisioning requirements could significantly decline and you could have strong earnings growth for the PSU banks. Base effect also will come into play. So my sense is that I think the PSU banks and the corporate lenders like Axis and ICICI are in a fantastic trading up move, and investors should certainly ride that up move for the next few weeks or months or so. I don't know where this point will end. But from a long-term investment point of view, I think core holdings have to be in the private sector banks, which are continuously gaining market share at the expense of PSU banks, and there are many other businesses and revenue streams, especially a play on the financial services as well, also coming over there. So while PSUs and the corporate lenders are good for trading, including Union Bank of India, our preference from a long-term investment point of view has to be for the private sector banks. But just a word of caution, I think investors should have a adequate exposure or a fair amount of exposure to banks. Must not be overexposed. I think typically Nifty is about 25%, so at best 30%, 40% of your portfolio could be in banks and NBFCs, and not beyond that, because overexposure to a particular sector also could be detrimental to medium to long-term returns.
Okay, a quick perspective on Union Bank for a long-term investor, Ashwini.
See, long-term is a very relative thing, but these guys are not moving up because of results or because anybody expects policies to start working immediately. They are working because the government finally is moving. Somebody is taking the bull by the horns, and there is some directional movement, and that is why these stocks are moving up, and in spite of bad results they will continue to move up because the market is focusing on the NPA resolution more than results. So I wouldn't be surprised that something like a Union Bank, if a few more of these policies come out, etc., and things start to get resolved, can get up to 280, 300 only because of under ownership and strategic shorts start to get covered. If you see 5 years ago, maybe Union Bank was 400, 450, so still much lower than earlier levels. So easily he could double his price, but these are not long-term investments. Things take time in this country to happen. So I would probably get off the bus once I get another leg of rally which takes me to 280, 300.
Fair point, but even that would be substantial. It's 180 now. There is a caller, I believe, also on banks. Vivek Pandey is calling us from Delhi. Vivek ji, go ahead, your question.
Yes, sir. My name is Vivek Pandey. Good afternoon. And I am holding 200 shares of SBI, and from last 3 months, and I bought it at the rate of rupees 280. So what I am thinking of holding it for a long term. Can you brief me? What is its future, and how should I move forward?
Okay, at the moment SBI is still giving him money. Dipan?
Yeah, I think as I said, PSU banks, SBI included are in a nice trading, spring over here. And next few weeks and quarters could be quite positive for SBI and the PSU banks. Any more developments on resolution of the NPA problem will certainly improve the sentiment over there. And I think numbers also could be good going forward over the next few quarters or so because of lower provisioning. And SBI, I think the merger also will certainly have an impact and perhaps improve the cost-income ratio, because there could be some inefficiency, some overlapping of costs which could be reduced. So I think amongst the PSU banks, from a safety perspective, I think SBI still appears to be by far the best, and the investor is anyway sitting on a profit. So I would say it's better to remain invested for a few more months and just wait and watch and see what happens. But I think further investment is not advised, at least at higher levels.
Okay, Ashwani, very quickly, State Bank of India, 300 around right now. What's your next target?
See, unless he's very emotional about SBI, if I were him, I would be in a housing finance company, because, it's going to give him grief, like he looks a bit disappointed. But if you are really long-term investor and you don't care, etc., maybe long-term you'll get 450. But the right way to enjoy a bull market is to be in the sector which is outperforming, which is NBFC, and it is not the corporate lenders.
Point taken. Ashwani and Dipan, thank you very much for patiently taking questions from our Twitter friends as well as from our phone callers. Well, that's the message that you have got from our experts. Enjoy the bull run. Thanks for watching this show, Markets Today.
Have a great evening ahead.